So I had that confidence that CAD here was going to go down because of the following reason. Number one, it was clearly at the supply area. Number two, it had a corrective structure on 1 hour time frame, and it was at New York session trying to break down. I gave you the trade and it gave 80 pips straight on. But why did it go back to the upside? Or first and foremost, why did I have confidence that it was going to continue to go down? Because I knew that Bank of Japan was going to release interest rate report in the night. And because I knew that there was inflation everywhere, including Japan. So my calculation is that they are going to raise interest rates. They have no option. They have to raise interest rates. And if they raise interest rates, what will happen to the value of yen? The value of yen will go up. And as the value of yen goes up, remember, yen is at the back. If the value of the currency that is at the back is going up, then you are automatically saying that the value of the currency at the front will be coming down, because that one at the back we have a more weighty strength than the one at the front. So meaning that my CAD JPY will continue to flush down. That was the calculation. But when Bank of Japan, they now came up to tell us that the inflation that is happening now is a temporary one. It's not going to continue like this. And those people, they are very crazy when it comes to protecting local businesses, when it comes to, driving investment within the economy. Japan is crazy. They can suspend any other policy just for them to be able to protect their what? Just for them to be able to protect their local economy. They said it was a temporary one, and all right. They said it was a temporary one, and they were not going to, because of that, increase interest rate. And what happened? Yen fell. Can you now see that what I'm teaching you is happening live in your eye? All you just require to do is to keep going to the news, to read what the news is talking about, so that you look at the technical analysis and you find alignment between the fundamental analysis and the technical analysis. Do you understand now? Those that are not partaking in this training, they don't have understanding of what we are talking about. Even when you go to the general group to answer questions, they don't understand what is going on there. Because I keep emphasizing, ignoring your foundation and jumping straight to technical analysis amounts to deception, amounts to gambling. You don't know what you are doing. You are just doing it. Do you understand? And there is need to eliminate every form of gambling in this business. This is a business that is based on data. It's based on referencing news release, referencing socio-political happening, referencing the economic data released by different countries. When you have a measure of knowledge of some of these stuff, it becomes easy for you to interpret technical data. Are you okay now? So that having said, we'll now go straight to continue our lesson for today. So I'm going to share my screen right away. Right away. Sorry. I'm going to share my screen right away. Yeah. Sorry, guys. I want to go back to our PDF. Close this one. Are you seeing my screen now? Are we on Telegram? Are we on Telegram? Eh? Are we on Telegram?
Yes, sir.
Yes, sir.
Okay.
I can see the screen.
Okay.
Yes, on Telegram.
Okay. Let it load. All right. Are we on our course outline now?
Yes.
Correct. So let's look at the 3 of Forex Foundation class. You know, we are gradually entering into it. So we are going to start by opening a trading view account for free. You see, you know, from day 1, day 2, we have been talking of fundamental analysis. We have been talking of basic economics. We have been talking of the foundation, what is Forex, this and that. It's only that light. What is Forex, this and that, financial instruments, and so on and so forth. We have been talking of all these for the past 2 days, 2 sessions now. You know, so this evening we are going to move a bit further into foundations of technical analysis. And when you start trading, you are going to use a tool. You know, every trade, every professional has a tool that he uses to carry out his work efficiently and effectively. For instance, for an architect, they have their own tools. Lawyers, they have their own tools. Probably their own tools is constitution. All right. Engineers, they have their own tools. If you ask a mechanical engineer, he will tell you the tools he will use to carry out his job. When you ask of a doctor, they have their tools, all those stethoscopes, all those thermometer, all those things. They are their tools. All right. They have their own tools. Then in trading financial market in general, we also have our own tools that we use that make our job easy. Of course, you know, the essence of a tool is, you know, to make your job easy for you to do. All right. So in trading financial instrument, we also have a tool that is making our job easy for us to do. And in the case of us here, the tool that we use is what is called trading view. All right. Trading view. Trading view contains a bunch of tools that make analysis of the market a lot more easier for us. Are you okay now? It makes the analysis of the market a lot more easier for us. I've got to mute all right now because I'm not comfortable with the noise I'm hearing. Okay. Mute all. Just a second, please. Mute all. Yeah. All right. I believe the noise level is 0 now. All right. So the tool we use in trading financial market is trading view. And I'm going to open a trading view account. You know, I'm going to display how it is done so that you can all understand it. So if you want to open a trading view account, all right, you want to open a trading view account, you come to your Chrome here. What do you write? You write tradingview.com. Tradingview.com. So when you write tradingview.com, when you come to tradingview.com, what you do is that You go to, you see, I already have account. So here, right now, let me sign out. Let me sign out first. Okay, sign out first. Here, you see, when you get there, you see, get started. You see this small sign beside get started. Are you seeing that small sign beside get started? Somebody should just unmute and tell me if you see it.
Yes, sir. Yes,
I am. I've seen it.
Okay. So click it. So when you click it, you see sign in. Click sign in. When you click sign in, you can see that because I already have account, bringing my username and password. But you that don't have account, you see sign up, down. You can see sign up. So here, you just click sign up. When you click sign up, is it with email? Yes. Just come sign up with email. So here, put your email address. I want to sign up maybe for my wife. evelynkusimuro1@gmail.com. I'll put a password right here. Password right here. I've read and agreed with them. Mark it here. Click account. Okay. What happened? They say username, letters, number. Okay. That's no problem. Just say every. That's username. Okay. Sorry. Username. Yeah. Choose your username. This is email address. This is password. I'm not a robot. Create account. Why? Why is it not accepted? Oh, I've already opened. Oh, there's somebody in TradingView who is already using Airflow. So they will not take this one. Let's use Airflow one. All right. I'm not a robot. Let's go. Create account. Somebody is using Airflow one. Let's use Airflow 1, 2, 3. 1, 2, 3. Okay. Motorcycle. Click motorcycle. Verify. Create account. Why? This username already used. Okay.
Why not try your daughter's name there?
Oh, okay. They will say somebody is using Debra again. Debra. 1, 2, 3. What? Account. Username is already every 4, 5, 6. No, Debra 4, 5, 6. What? Traffic light. Click traffic light. All the traffic light. Click them. Click them. Next. Okay, they are not satisfied. Bicycle. Click bicycle. Account. Username is already in use. Okay, let's use Deborah like this. Let's change the spelling. That's the problem for names that are popular. You have a lot of people competing for such names. Okay. And name is already used. Remember,
that is not because of the email address. The email has been used before. That's why.
Okay, let's address Nathaniel. Tunde. because I have trading view. That's why it's difficult. But your own is going to be very easy, right? You understand? Okay, let's not waste a lot of time. Here, put the username that you want here, put your email address here, put your password here. I'm not a robot, create account. Your own is going to be easy because you have not opened a TradingView account before. All right? Then, because of so after that, they will tell you to verify. They will send a mail to your email to verify your email address. Go back to your email, verify your email address, and as soon as you verify your email address, you are in. You now have a TradingView account for free. So now, how do you now access the TradingView account? It's very simple. What you do to access your TradingView account is that you now go to tradingview.com. Remember that this time around, you already have a TradingView. You are not good. You click sign in. You are not going to sign up again. That username that you use or your email, put your password here. You can say remember me so that anytime you want to sign in, your password will just come directly. You click sign in. You can see sign in. This is where it will take you to. Now, I just want to give you a brief description of this TradingView platform so that you now see how and why we use it as our tool in this business. All right. So what you do is simple. When you come here, it will take your own tool to take it here, to take you here. The only thing that is concerning you for now is chat. You see chat here, click chat. All right. You click chat. When you click chat, I'm going to walk you through smartly so that you know how to go about it. Can you see? It has come to chat. It has come to chat. So this is the chart. Which chart is this? Card JPY. You see where I gave you the sell here. It came here. You see the effect of the interest rate that is left unchanged. Can you see? Going back up. Okay. Now, these are the tools. When you come to left-hand side, you have the tools that you use in doing your analysis. When you come to, excuse me, when you come to right-hand side here, you are going to see the currency pairs. Let me hide them for now. All right. Now, what you do is this. Here, on top here, you have the time frame. This is monthly, weekly, daily, 8 hours, 4 hours, 1 hour time frame. What it means is that if you are on daily, it means that one candle here is formed in 1 day. Each of these candles you are seeing here is formed in 1 day. That's what this daily means. If I go to daily, can you see? Only 1 day. Look at how market moved from down here right to up here. Only 1 day. Look at it here. From here today, market moved from here to here. How many pips? Market in CAD JPY, market has moved about 196 pips. For somebody who has like maybe 10,000 US dollar, if you use 1.0 lot, you will have made 1,900 US dollar only today on CAD JPY. You understand? Then if you click on 4 hours time frame, look at it. Can you see that between here and here, how many 4 hours has formed? 1, 2, 3, 4, 5. No, 1, 2, 3, 4, 5, 6. 6 different 4 hours candle has formed today now. And you know that a day is made up of 24 hours. And when you divide 24 by 4, how many is 6? So 6 different candles will form, or 4 hours time frame will form in a day. If you go to 1 hour time frame, you are going to see difference now. Can you see? It is changing from here to here now. We are going to count like 24. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, We are going to get 24 that has formed today. So that's where you change time frame. When you get to top-down analysis, you see it here. If you want to add any time frame that is not here right now, just click this sign here. You can add. You can see that you come down to the low here. You say add. You see add. When you say add, is it minutes or hours? Let's say we want to add hours. You click hours. How many hours do you want to add? 10 hours. I'll now click add. Okay. Can you see 10 hours has come here? 10 hours has come. Let's say I want to add 20 hours. Can you see that 20 hours is not here? I'll just come to I'll say hours. I'll just 20 hours. 20. I'll click add. Can you see? 20 hours has come here. So 20 hours has come here. So now, if you want to change this place from candle, you want to change it to line chart. What you just do is just come here, click this one. You see candle, you see hollow candle is changing. You see, if I want to say line chart, can you see? Change it to line chart. If I want to change it to another thing, area, another thing. But what we use is candle. Just leave it at candle. All right. Here, if I want to add indicator, I don't use indicator. I only use a relative strength index, and I will tell you what I use it to achieve. All right. So I'm not a fan of indicator. So I'm not even going to teach you how to add indicator to your chart. But for the purpose of you getting your divergence, that's what I use it for. Click indicator here. When you click indicator, click indicator here, RSI, on yes, RSI, you now come here, you see index here, click it here. As soon as you click it, what happens? RSI, just come. Can you see? I have it before. You see the RSI. If you want to remove this one that is here, just click this X that is here, remove it out of it. You want to remove this one, just click this one, remove it out of it. Or if you have added your RSI, for instance, you have added your RSI and you are working, you want to hide it, you don't want it to show. It's very simple. All right. What you do is very simple. If you have not eaten, just forget about your food tonight. We're going to have no less than 2 hours because I'm going to detail what I want to do. You may not even be able to finish, but I promise you, we are going to do 2 hours. All right. If you want to hide this indicator, just click it twice. Until the view. Can you see? Disappear. If you are working, you want to make use of the indicator, what you just do is that click it twice, it will appear. You understand now? That's indicator. If you are using a page, like I'm using a page trading view right now, I can set alert that if this market get to this place, I want to get alert in my email. What do? I put alert. I click alert here. Okay, I'll say card JPY. I want it at 102.77. So I'll click 102.77 here, 102.77 here. I say only option. If it's crossing, it's what. Can you see? Once I click it, can you see? There is a line there. That's an alert. Anytime this market touch this value, email will come to me. Even if I'm inside boss, I'm not on trading view. Trading view will give me an alert that card JPY has got to this resistance. All right, I will now rush back to my chart and see what is happening. Can you see? These are the basic features. You come here, you see this one, this is trend line. You see small arrow beside trend line, click it here. You see arrow, this is trend line. You can see it, boom. Can you see? Click the arrow. You see this arrow, if you want to use this one, can you see? Boom. Click this small one. You see this one? Which one do we use here? Horizontal. Horizontal rate. If I want to get the horizontal level here. Okay, click this one. Which one do we use again? Basically, these are the things that we use here. All right. Here, you see, this is what is called field. As you go deep, technical analysis, you are going to make use of what is called field. If I want to know the extent of retracement between this level and this level, I'll put this one here, from here to here. You get this different level. When you get deep in technical analysis, I will show you all these things. All right. Well, fib extension. When you get to Elliott wave theory, I will show you how to use this one. Can you see? That's a 2. All right. Look at this one. I use it to write. All right. You see this guy here? Brush. You see it here? I put it here. I use it to write. I use it to write. Okay. See, use it to write. B. I use it to write. Brush. All right. That's this is triangle. If you want to draw a level, here. Can you see? You put it here. If you want to change the color, what do? You click it. You come here. All right. Change the color to this one. Can you see? Change this one. Change it there. Can you see? Color is changing. That's how to change the color. Click it. Just click it. All this one will appear here. You do whatever you want to do. All right. This is the color. This is the 2 area where you change the color. All right. If you want to write something, you see text. T. Okay. Come here. Text. Click it twice. All right. Click it twice. And just say my name. Can you see? After that, I see my name is Nathaniel. You want it to be good like this? Click this one. All right. Make this one. Can you see? Sum it up. You want to change the color? Just click it twice. This is black. Change it to what? Orange. Can you see? Can you see? Simple. Are you following, guys? It's as simple as yeah. Let's move. This one, just leave this one. This is Elliott wave theory, practical Elliott wave theory. Leave it for now. When we get there, you know how to use ABCD pattern, cipher, all this one. Leave it for now. Elliott wave 1, 2, 3, 4 impulse. All right, like 1, 2, 3, 4, 5, 6. 1, 2, 2, 3, 4, 5. That's an impulsive move, all right? This is an impulsive move. Or you have it like this, okay? With 1, with 2, with 3, with 4, with 5. All right? This is how to go about it. Leave that for now. Next. This is just dollar sign, all manners of sign. You want to do your analysis. This is where you get them, guys. Okay? If you want to measure the P value between 2 distances, like between here and here, this is the ruler here. This is what's called ruler to measure from here to here. See it? It's 348 pips. It's as simple as that. What else again? If you want to delete, if you have written some things, all right, you want to delete it. It's very simple. Come here, just click delete. Boom, they are all gone. All right. If you don't want to do that, you can also do something like this. If you have done something like this, you have to click. If you don't want this one to carry effect again, click this plus. Once you click this plus, this one will be highlighted. Once it's de-highlighted, you can see. If you want to delete this one, just click this one. Once that one is highlighted, what you just do is simple. Once it's highlighted, come here and now click delete. Either you click delete here or you click delete here. It's as simple as that. Or if you have done something like this, you want to change the color. See, as this one appear here, just click this one. No, sorry, just click this one. Click this one back. This one highlighted. Okay, click this one. Then change the color here. Change the color here. Can you see? Color has changed. You want to delete it? Highlight it here. Delete it here. It's as simple as that. So you know how to use all these tools now. You can see my own. I don't come here again. I'll put them here. Can you see them? All this one I use them. How do I do them? When I click this one here, you see anyone will start here. Anyone I want to use, I will start it. Once I start it, it come over here. Let's say I want to be using this one. Once I start it like this, you see, it has appeared. If I want to remove it here, I just click this one. It has disappeared. It's as simple as that, guy. So that is trading view and how to use trading view. I've used 5 minutes to navigate you on trading view. You can also come here, click this one. Can you see? All these symbols will appear. If I want to add another symbol, I click this plus here. leave this plus here. Okay, I will say GBP ZA. Enter. Can you see? Come here now. GBP ZA. Enter here. Look at it. It was not there before. Can you see? Enter here. All right. Enter here. You understand? So this is how to navigate trading view. Now let's move ahead with our lesson. Way back on our course outline right now. Are we back on our course outline right now? Are you people hearing me again?
Yes,
Hello?
yes.
Okay.
I can hear you, sir.
We can hear you, sir.
Are we back on our course outline now?
We can hear you, but I believe we
Yes,
can.
yes.
Yeah,
Yes,
I can hear
sir.
you, sir.
Yes, sir.
Okay.
Yes.
Okay. So what does outline number 2 says?
Types of analysis in financial markets.
Correct. Oh yeah, now let's go. Let's go. So we need to be writing. So we are going to use this whiteboard. All right. We have types of analysis in the financial market. We have 1, technical analysis. 2, fundamental analysis. 3, sentiment analysis. 4, behavioral analysis. All right. These are the 4 types of analysis that I make use of in the financial market. Number 1 is technical analysis. Technical analysis is simply the use of chart, all right? The use of chart pattern to depict what is happening in the market. We want to make use of chart pattern to know what is happening in the market, all right? So, and that chart or chart pattern, you can get it from TradingView. That's why I told you our main tools in analyzing financial market is by making use of what? Of chart pattern. Now, look at this one now. All right. Look at this one now. Look at this one now, for instance. Can you see this market? We made a push here, made a push here, it corrected here. Made a push here, it pulled back here. Made a push here, it come back here. Why are we knowing all this? And not just making a push and coming back. We also make a trend. Look at the trend. Can you see? Look at the trend. Do you understand now? So this is a clear uptrend in the market. A push up, pull back. A push up, a pull back. And each time it's pushing up, it's breaking the previous top. That's what's called a trend. Highest top, break. Highest top, break. Highest top, break. It is only here that is not able to break. And that is when the uptrend now stop. And now here it broke it. All right. But when it broke it here, what do we experience? Where is the previous low here? You can see that this is the previous low here. What happened? The market has invalidated the previous low, meaning that we are going down. What next? Correction down. Correction down. Can you see? So when you see something like this, it's a clear trend up and down. So what are we talking about? When you are studying the market, making use of not what is happening in the realm of the fundamentals in the economy, looking at inflation, looking at the socio-political event, looking at all those things. When you are not looking at GDP, you are not looking at all those things, you are only looking at your chart. Then you are doing what is called technical analysis. Are you okay now? Now, next is fundamental analysis. What do we mean by fundamental analysis? Fundamental analysis is the process of analyzing financial market by merely looking at the key indicators of the economy and how they affect the movement of their currencies. All right? For instance, when you begin to look at what is happening in the United States in terms of their GDP, in terms of their inflation figure, or what is called CPI, Consumer Price Index, or you are looking at what's happening in the United States in terms of the outcome of the presidential election or the outcome of the Congress election, who is going to take over the Senate, who is going to take over the House of Representatives, and the consequences of the economy as a whole. When you are beginning to look at all these things, and the consequential effect on United States dollar, then you are studying fundamental analysis. And you can base your analysis just because of this reasoning alone. And you can trade the market based on this reasoning alone. But I can tell you that the best form of analysis that you can have is by combining technical analysis with fundamental analysis. What do I mean? If you are technical analysis alone, you are not concerned about what is happening in the economy in terms of their key economic indicators and as it affects the chart. But if you are a fundamentalist, you are not concerned with the technical chart. But if you are combining technical analysis with fundamental analysis, you are able to look at what is happening in terms of the fundamentals and key indicators of the economy, like GDP, like inflation, like interest rate, and all those things. You now come back to the chart and look at what is happening in the chart and see the converging point between those key indicators that you have measured and how the chart is behaving. Because I can confirm to you today, it is a secret that many don't know, that all that is happening in the realm of the fundamental is what is transforming into the chart that you are looking at. Without the fundamental pushing the chart will not look the way it is looking. The algorithm that is set for this chart to move is based on the information that is coming. What? In the realm of the fundamental. Gone are the days. Market don't move choppy like this. When it's going in uptrend, it continues to go uptrend. When it's coming downtrend, it's coming flat. Why? Because information dissemination was slow and poor in the 40s, in the 30s, in the 20s. But today, information is quick and fast. We have CNN, we have Twitter, we have Bloomberg, we have Telegram, we have all manner of this. And therefore, this has resulted to what we call headers behavior. Headers behavior. Headers behavior. You know, head of animals. When they are going, they go in the same direction. You understand? So there's also what is called, if you read my project, my project PDF, my research PDF that I sent to you, you see the problem of headers behavior. Headers behavior. In forex trading and financial market trading, there are also headers behavior. How does it arise? When somebody gets an information and put it on Telegram group, they begin to disseminate this information. You see that the whole world will be buying JPY. That's headers behavior. Excuse me. What if that person is wrong? Everybody will be wrong. If that person is right, everybody will be right. That's behavior. You understand? So combining technical analysis and fundamental analysis is the best form of analysis. Now let's move on. Next type of analysis is called sentiment analysis. Sentiment analysis. What do you mean by sentiment analysis? Okay, sentiment analysis is the analysis in the market that is based. Please, no, just hold on. Sentiment analysis is the analysis that is based on understanding the risk parameter in the market. I told you in yesterday's lesson that investors all over the world, they are able to recruit the best economy to assess the risk parameters across 4 different primary markets. And diversification of their investment portfolio is going to be based on the risk parameter that they are able to, spread out. Putting much investment on the market that is less risky and putting lesser investment on the one that they perceive to be more risky. You understand now? So now, there are 2 types of environment in the market. Now we are talking of sentiment analysis. You have the risk on and the risk off. The risk on and the risk off. The risk on environment is an environment where the financial situation in the economy is very stable. There is no war. There is no outbreak of epidemic. All right? There is no war. There is no outbreak of epidemic, and everything seems to be going on smooth. And in that case, you discover that all investors will invest their money in Forex market. Forex market will be booming, and some other market will be witnessing less liquidity. Do you understand? That is what is called risk on environment. All right. That's what is called risk on environment. Somebody said the audio is not clear. Is it not clear up to now? Hello? Are
It
you
is
hearing
clear,
me?
sir. It is clear
The-
from my. I think
the-
it's
the
that
audio
person's
is
network.
clear.
I hear you, sir.
It's
Clear.
clear from my end, sir.
Okay. All right, it's clear. Let's go. So that's what is called risk on environment, because there is no problem. There is stability in the financial system. Everything seems to be going on here. And you see, all investors will be investing their money in currency. That's risk on environment. All right. And we have risk of environment. Risk of environment like this. Risk of environment. Risk of environment. When there is risk of environment, what does it mean? It means that environment is not, risk is everywhere. There's no stability anywhere. There is war, there's epidemic, there is this. So when it happens like this, no currency has guarantee in that case. Investors, they remove their money from currency. Where would they put it? They go and put it in gold. They go and put it in Bitcoin. They go and put it in commodities. Because in such environment, it is this asset that will be stable. All right? So now it is important for you to also know, as a trader, as an upcoming trader, what is risk on, what is risk off. Under what conditions should you be trading in Forex massively? Under what conditions should you run away from Forex and run away from some other things? That's why I'm preparing your mind now, that even though you are a Forex trader, there are situations where you don't trade in Forex because you will not see trend moving there, because there is less liquidity as a result of investor removing their investment from Forex and putting it in other portfolio like bond market, like capital market. Do you understand now? So that is another type of analysis. The fourth type of analysis is what is called behavioral analysis. When you want to study behavioral analysis, you want to look at how the chart is behaving. In New York session, how does the chart behave? In London session, how does the chart behave? In Asia session, how does the chart behave? Does the chart behave? And how are you supposed to position yourself to be able to, trade according to that behavior? That's what is called behavioral analysis. It's much more deeper than this. You cannot study behavioral analysis of the chart without knowing what is happening, when, why, and how. So the process of knowing what is happening in the chart, why, when, and how, is called behavioral analysis. When you follow me to intermediate and advanced, you get the detail of all this. All right. So these are the basic 4 types of analysis in the financial market. Now let's do the overview of the analysis techniques I use. All right. The essence of telling you all these things, I'm giving you a general perspective of what you will be meeting as an upcoming trader in the financial market. This is the general overview I'm just telling you. Preparing your mind so that when you now get to the intermediate class, and I'm now mentioning Elliott wave theory for you, and I'm breaking down how Elliott wave theory works, and I'm breaking down how demand and supply work, break it down support and resistance, and break it down smart money concept. It will not be new to you. That's the essence of this foundation class. All right. So when you enter university and they want to teach you, let's say, let me use economics for instance, you do Eco 101. In Eco 101, you do general overview of what economics is all about. So some of those things, they'll just mention it for you. When you now get to year 2, you meet another level of economics. But it will just be a course. You will not say you have not heard it before. You have heard it before, but we now give you the details. So I'm giving you a general overview. So overview of technical analysis. I told you technical analysis, we do it on the chart, okay? So how do we now analyze the chart? We can analyze, I analyze the chart Some people analyze the chart using many techniques, but I, Nathaniel, combine 4 different techniques to create my own unique system. All right. I make use of Elliott wave theory. I make use of demand and supply. I make use of support and resistance. I make use of smart money concept. All right. Number 4, types of trader. We have types of trader. We have different types of traders. Okay. We have what is called position trader. We have what is called swing trader. We have day trader, and we have a scalper. All right. These are the 4 different types of trader that we have. Now, let me explain to you the position trader. Let's go to the chart. Position traders, they don't trade in smaller time frame. They trade in monthly time frame. Look at monthly time frame. Can you see? Position traders, what they do is simple. Can you see? Several months ago, I came to this chart and I did this. And I said it's going to go up. Can you see? Up. So, position trader will have bought here. All right. What year is this? Position trader 2011. No, that is too far. They can buy here at this level. Okay. And they hold it. This is what? 2018. They hold it like this. Okay. They are buying for long term. Long term. They are doing long term investment. So they are going to use a higher time frame. You see the excess of me navigating you through trading view. As a result of me navigating you through trading view now, it's not difficult for you to see why I'm clicking monthly. So position trader, they make use of monthly time frame to take their trading decision. And they hold their trade for like 2 years, 1 year, 3 years, and so on and so forth. 2, swing traders. Swing traders, they can hold their positions, trade from daily, daily to weekly. For instance, a swing trader now can decide based on his analysis that, oh, this market is going to start going up from here. So the swing trader want to catch this swing here, this swing here, this here, swing here. He wants to catch it. All right? Because he believes that corrective structure is over here. So you will catch this. This one will do like this. Push like this. Push. He's still holding it. He will still hold it. That is what a swing trader can hold his trade for like 1 week to 2 weeks to 1 month. All right. The third type of trader is a day trader. Most of us that you see here, we are day trader. We operate from 1 hour to 4 hours time frame. All right. Like day trader now, you now see, oh, it's a break of structure. This is a break of structure. Can you see? 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 Can you see the break? Correction. Boom. 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 So this is a day trader. 4 hours time frame. He's going to take his trade here. Break of structure. This is a setup already. All right. Take his trade here. How many people you have caught here? From here to here, about 1,106 pips. Big one. You understand that? So that's a day trader. And we operate 1 hour, 4 hours, 30 minutes, 15 minutes time frame. And then you have a scalper. A scalper. A scalper, they want to get into the market and get out. Excuse me.